the central bank would be having total control on the information of citizens, so they could be able to say exactly what you can buy and what you cannot buy. Are we funding the wars when we are buying Bitcoin? Today, the traditional banking system works in a way that when you deposit €1 in the banks, they create €9 out of that. You are removing energy from those bad activities and you're deciding yourself what you want to do with your money. The probability of Bitcoin going to zero is almost zero. In real terms, mathematically, Bitcoin is becoming scarcer every day. Hello everybody. So today what I wanted to do is just to take some of the questions that you've been asking me this last few months, and we'll go through some of them. So it's not necessarily in order. I will just take the first one. What is the risk of CBDCs? So CBDCs stands for central bank digital currencies. And the thing is that governments and central banks are deciding and thinking about creating this currency that could be absolutely monitored by them. How it works right now. You are using, I am using, we are using private entities. Banks are private entities. We can kind of protect our privacy in a way that the government is not supposed to know exactly what we're doing, what we are buying, and all of that. Even though we know that the big tech companies are basically an extension of government agencies, but this is another subject. But at least we are kind of protected. The goal for them is to create a central bank digital currency, meaning that the central bank would be having total control on the information of citizens, so they could be able to say exactly to you what you can buy and what you cannot buy. And it could be even worse than that. It will become a programmable money. So they could say, for example, at the end of the month, if you haven't spent your entire salary, got some fine, or you will see your money not being usable anymore going through the other month. So yeah, it could be worse than inflation in that sense. And of course, the end of privacy as we know it for individuals. Obviously, if there is a central bank digital currency, they can also, for example, if you do something or if you say something that government doesn't like, they can just ban you and freeze your account. For example, when you had the trucker protest in Canada, the government have been able to send orders to private banks, private entities, to freeze the bank accounts of those people protesting during the truckers' protest. What happened is that the military and the police in Canada literally blocked the truckers on the road, and the government froze their bank accounts, so they couldn't even buy anything. That's an example of what could happen with central bank digital currencies, where there is a direct, even more direct link between government and your money. So there is really two directions here. There is the freedom path with Bitcoin, as you will understand on this YouTube channel, and there is the slavery or modern slavery path with central bank digital currencies. The most well-known central bank digital currencies in the world is in China. China have been the first to experience that. They have total control on their population. And so in China, for example, if you're Chinese, you can do something very, very small in terms of infraction, in terms of incident. Let's say, for example, to cross the road, you have some specific areas to cross the road. And if you don't use them, you can just receive a fine. And how does it look? It's not like in France or in free countries where you receive a letter and you have the right to pay, or you have some time to pay and all of that. With China, they have directly access to your bank account, and so they just take the fine themselves. So yeah, that's an example of central bank digital currencies. The European Central Bank have been working on this for years, but even countries like Switzerland, even countries like most of the big countries in the world are working on a central bank's digital currencies, and they are taking China as an example. So quite scary. Another question that I get often is, does Bitcoin legal or illegal? Is Bitcoin for criminal? Is it legal to use Bitcoin basically? In people's minds, it has been something that have scared a lot of people, scared them and blocked them even to start investing. I completely agree with them. Traditional media and politicians and all of that, they have created this reputation for Bitcoin. First of all, it is not true. And as we speak today, Bitcoin has been proven by the US Treasury, which is kind of ironic that they are the one doing the research, but by the US Treasury, it has been proven that no, Bitcoin is not for criminals, and that criminals are using 99% of the time traditional fiat currencies, especially the US dollars and the euros, to commit crimes, and not Bitcoin. Which is understandable, because if you understand the Bitcoin blockchain, right? If you understand the blockchain, it means that everything is traceable with Bitcoin. And so if you want to commit a crime, it will be the worst thing to do than to use something that is fully traceable. So no, Bitcoin is not for criminals. The US dollar is more used by criminals. I had another question that was kind of similar. Are we funding criminal activities when we're buying Bitcoin? Are we funding the wars when we are buying Bitcoin? And here, I think that's the most important questions, because right now you are using fiat currencies. So what is fiat? Fiat is the traditional currencies. So if you use the euros, for example, and those currencies, when you pay your taxes, when you use the euros, this money is being used by your governments to then entertain and pursue wars all over the world. So in that sense, when we accept the system and when we pay our taxes and when we use the traditional currencies, we are the one funding the wars. And that's the thing. If you travel around the world, you will always meet people who don't want to do anything bad. They don't want to do wars. They just want peace and unity and love. That's what happens when you travel the world. So who is deciding for this? The people doing that are the people in power, politicians, who are okay with sending other people's sons to make wars anywhere in the world, right? Think about where does your money goes. So that's, as I said, your taxes and the money you use. But it's not only that. It's also the way of the traditional banking system. Today, the traditional banking system works in a way that when you deposit €1 in the banks, they create €9 out of that. And then what they do, they don't just keep your money there, right? They're not dumb. So they use your money and the money they've created, and they go and invest that money in the stock market, for example. You need to follow your money. And when you follow your money, you see that those banks are the one investing this money into different companies that are there to sustain and maintain wars. So there is all the incentives in the world to continue wars. There is zero economic incentive to stop wars, because if the bank that has your money is investing into companies that are creating those weapons, for example, they need to create more weapons every year. They need to keep doing that. So what happens is that when you take your money out of the bank and you put your money into Bitcoin, you are removing energy from those bad activities, and you're deciding yourself what you want to do with your money. So no, Bitcoin is not funding criminal activities. I would say that's absolutely the opposite. Your money in your bank is doing that. Now there is something else with fiat and government money. It's that the money they create is infinite, right? They can create always more units, and they can finance their crazy ideas and their crazy desire for more wars. The difference with Bitcoin is that Bitcoin is limited in quantity. We cannot mine more Bitcoin than there is going to be. So there is going to be only 21 million and never 1 more. And so when you create a limited scarce money, what is funny is that all of a sudden people start to take care of it. People start to think about, oh, maybe I will not buy this thing, maybe I will not go do this war. Everything that is scarce in terms of money create abundance everywhere else. And when the money is abundant, so unlimited or inflated, then it's not abundance that is going to flow to people, but it's scarcity in the cost of the quality of living. What is crypto? So crypto refers to digital assets that are protected by cryptography. The thing is with crypto is that they are protected by a mechanism that we call the blockchain. It's designed to be open and decentralized, at the difference of fiat currencies that are completely centralized. So just on that point, what does it mean, centralized or decentralized? Centralized means that in the traditional financial system, your euros are created and monitored by the European Central Bank. So this is one institution that have the power to create euros out of thin air and create it. But a decentralized cryptocurrency means that there is no one central authority that can do that. Normally, you will have different nodes in the system designed to decentralize the power of the crypto. It's important to say that there is millions and millions of cryptocurrencies out there. It doesn't mean that they are all open and really decentralized. Actually, this is my honest opinion. Only Bitcoin is worth studying and worth investing in, because this is the only one that is really open, decentralized, and valuable. Why is that? Because right now you have more than 25,000 nodes visible on the Bitcoin blockchain, and those nodes are in more than 100 countries in the world. So you have a fully decentralized system. And we can consider that more than half or the majority of the Bitcoin nodes are not visible, okay, by design, because Bitcoiners, people who invest in Bitcoin, who have the philosophy of Bitcoin or not, they want to protect their privacy. So they will use things like Tor, for example, to protect their privacy and not be visible even though they have a node. You can also consider that 85% of the population lives in authoritative states. It means that they're not allowed even to speak about Bitcoin, so they will not decide to be visible on the Bitcoin blockchain. They will always use tools to protect their privacy even though they run nodes. If you are still here, it means that you are interested in investing. Maybe you have never invested your money before. So my name is Appel GRATUIT. It's a pleasure to explain to you all of this concept. Financial education is the primary thing here. So financial education, Bitcoin education. So yeah, I invite you to click on the link in the description if you want to know more and connect with me on social media as well. The other question that I has, especially for beginners, maybe like you, is to understand if Bitcoin is risky. Is Bitcoin a risky investment, and does Bitcoin can actually go to zero in terms of value? So for you, what I've done is that I decided to actually run the math, and here's what will need to happen and why the probability of Bitcoin going to zero is almost zero actually. So first, Bitcoin is running 24/7 with 99.98% uptime since his beginning in January 3rd of 2009. So what does it mean, an uptime? An uptime is the time of connection, right? For example, we all use Google. Google had a lot more downtime, not working for a period of time, than Bitcoin. You can consider that Bitcoin is almost 100% of the time working. There has been at the very, very beginning, I think it was in the first 2 years, like a very small lagging. It didn't die. So that's just in terms of technology. to have something that has a 99.98% uptime is just crazy and just revolutionary just in itself. And so it's been more than 17 years that the Bitcoin protocol is running. I just remind you that there is no CEOs, there is no headquarters, there is no board of direction, there is no human beings monitoring the Bitcoin blockchain, no off switch. So yeah, in terms of mathematics and probability, for Bitcoin to actually hit zero, every single node in the entire planet would have to simultaneously shut down at the same time. And as I said to you before, there is more than 25,000 visible nodes. In my opinion, I don't have exactly the numbers on that, but I imagine that there is more than 100,000 Bitcoin nodes non-visible in the world. And I have the knowledge that some people have even sent Bitcoin nodes in the space, right? I think it's Blockstream that has done that. You can consider that there is Bitcoin nodes in the ground, in the ocean, wherever. Like, you can consider that Bitcoiners are really crazy smart people and paranoid people as well. So they have thought of every scenario possible. And so even if electricity go down on Earth, big nuclear weapon have explode or whatever the case may be, Bitcoiners have anticipated already those scenarios with sending the Bitcoin node and plugging some Bitcoin nodes even in the space. So we are close to zero in terms of the possibility of that happening. Then we need to increase our level of conviction when it comes to Bitcoin, and it comes with knowledge. That's why you're here, and I congratulate you for taking that time. I remind you to take some notes, pen and paper, because the best way to learn is active learning. If you're just listening to me, you will not remember for sure. So if you want to remember, take some notes. The Bitcoin hash rate just crossed 1 zettahash per second in January 2026. So I will try to put in the editing what a zettahash actually looks like, because I cannot read that number. It's 1,000,000,000 multiple times, so more than billions of calculations per second securing the network. You know, in Bitcoin, we have miners, and those miners are protecting the Bitcoin blockchain. They are all over the world in order to have just a small impact on the Bitcoin blockchain. There is a need of controlling more than 50% of the Bitcoin network. So you will need to have control over more than 50% of the hash power. Just to do that, you will need more than $40 billion just in hardware to purchase, and it will still fail because honest miners would fork around you. What it means is that the Bitcoin blockchain is a code. Okay, the code of Bitcoin is open source. Everything is open source. This is the big revolution there. And so if honest miners would see that some miners try to get together and tend to do what we call a 51% attack, the honest miners will just create a fork themselves and call themselves the honest miners, and the Bitcoin blockchain will continue normally, and dishonest miners will just die. They will have another Bitcoin that has zero value. That's also what happened in 2017. There has been two different philosophies in the Bitcoin ecosystem. We call that the blockchain war. And what the blockchain war was is that some Bitcoin companies, especially miners, wanted to make more money and faster money. So they wanted to increase the size of the Bitcoin blocks to put more transactions. More transactions means more rewards for the miners, and so more money. But the OG Bitcoiners who have the philosophy of Bitcoin, like myself, we don't want to change the rules. So changing the size of a block will change the rules. What happened is that there has been a fork. Okay, a fork meaning two versions of the Bitcoin code running at the same time, two different versions of Bitcoin working at the same time. Obviously, the one we are using and the one you're listening about is the real Bitcoin, even though it's not necessarily the case, because it's as I said, the honest miners who have forked, and the dishonest miners have kept the version, but this is called Bitcoin Cash and it's almost nothing. That's what can happen with Bitcoin, because this is just code, and you decide if you have a Bitcoin node at home, which version of the Bitcoin blockchain you want to run on your node. Just to give you even more argument, the average global cost to mine one Bitcoin in 2026 is around $77,000. So miners won't sell below their cost of production for long. Some people ask me about the Bitcoin price, and here you have something to remember. Bitcoin are still mined. It means that every day there is Bitcoin companies that have bought a lot of Bitcoin miners, so specific computers, to mine Bitcoin. And there is a cost of production to mine. Okay, you have to buy the hardware, you have to plug the electricity, you have to pay your electricity, and obviously you have to pay the people running those machines. And it's a very specific knowledge to have, so it's not cheap. And so the cost to produce just one Bitcoin is around $77,000 in 2026. And so miners won't sell below their cost of production. So when price drops below cost, weaker miners shut off. What does it mean, shut off? This is the only industry in the world where we can turn on and turn off the machines. When it costs you too much to mine, when you are a miner, you just turn off the machine for a while, wait for Bitcoin to go above your cost of production, and you turn on back your machines. And what is really amazing about Bitcoin is what we call the difficulty of adjustment, because here the difficulty will adjust and will go down. Okay, what is the difficulty of adjustment? It means that when you have on the Bitcoin network a lot of miners shutting down, turning off their machines, it means that there is less hash rate on the system. There is less computing power on the system. So when it happens, it means that normally it will be easier to get to mine one Bitcoin. It's like you have this big mountain, right? And you have miners coming to that mountain to mine gold, for example. So the gold is here, the mountain is here, miners try to mine into the rocks to get the gold. If a lot of different miners decide to stop mining, it means that you have, in terms of probability, more chance to get to the gold. But that's the magic thing about Bitcoin and about the inventor of Bitcoin, Satoshi Nakamoto, decided that he will create the difficulty of adjustment. He will just put more difficulty to mine that block or to mine that gold. And so you can imagine that the gold is going down into earth even more. And like this, you maintain a difficulty that allows only for one block to be mined every 10 minutes. That's why the Bitcoin time is not the human time. The Bitcoin time is one block every 10 minutes. If there is less miners, the difficulty increase. If there is more miners, the difficulty decrease, but there is more people, so there is less chance. So we get to approximately 10 minutes to mine one block. We are still in the same question here. Can Bitcoin go to zero? We are always here. So one information that is interesting to have is that there is still around 5 million Bitcoin that are estimated to be lost forever. And this is my opinion, that there will be always more and more Bitcoin lost forever. Why? So first, there is 1 million Bitcoin that are linked to the inventor wallet. So the inventor of Bitcoin is not known, okay? We don't know who created Bitcoin, but he has, or they have, a pseudonym, which is Satoshi Nakamoto. Satoshi Nakamoto has 1 million Bitcoin, but they have never moved because we don't know, maybe he's dead or something, but there is 1 million that we can estimate to be lost forever. And then you have approximately 2-3 millions, 4 millions even, lost to forgotten keys. Forgotten keys are Bitcoiners, people who have invested in Bitcoin in self-custodial way and have lost access to their Bitcoin. So probably maybe those people are not dead, those people are alive, but they don't have access to their Bitcoin, because when you lose your hardware wallet and you don't have a backup solution, the seed phrase written somewhere, you don't have access to it. So it's lost. But there is also dead hardwares without backup, but there is also all of the big exchanges, platforms. So that's why I'm always telling you to not invest through platforms, because those platforms goes bankrupt every once in a while, like Binance, FTX, Kraken, Mongox. All of those are platforms. Coinbase, they are platforms, and they go bankrupt, and they will go bankrupt, and they will continue to go bankrupt. When they go bankrupt is a huge amount of Bitcoin lost forever. So yeah, that has been the case, and it will always be the case. So if you invest, do it in a self-custodial way. You can go to Bitbox website, the Swiss company, the official website, and you can get your own hardware wallet. When you receive it, you will go into the setting, you will plug in, create a password, you will go into settings, you will go to manage device, show recovery words. You will then engrave that recovery word into metal plate, also on a paper, and you will keep that in a safe or different safe. That way you have your hardware wallet, which is the Bitbox key, and you have your backup, which is your metal plate with your seed phrase. If the key doesn't work anymore or you lost it, you buy a new one, you enter your seed phrase, you have access to your Bitcoin. So education, that's why you're here. And then we have approximately 600 Bitcoin per day that are aging into what we call ancient status, meaning untouched for 10 years or more. So we can consider for a lot of those that they are also estimated to be lost. Then we know that miners only produce around 400 Bitcoin per day. So the lost coins are outpacing the new supply. In real terms, mathematically, Bitcoin is becoming scarcer every day. So we know that the Bitcoin's hard cap is 21 million. We know that Bitcoin already mined is more than 19 million. The left to be mined is around 1 million. We subtract the 4 or 5 millions permanently lost coins. So the actual circulating supply is roughly 16-17 million for approximately 100 million estimated owners worldwide. So yeah, you do the math on that one. But yeah, it's the scarcest assets in the world. What we call the US spot ETFs are currently holding 85 billions in assets, more than 6% of all Bitcoin supply. BlackRock, one institution alone, holds more than 800,000 Bitcoin. So for Bitcoin to go to zero, every institution will need to simultaneously decide this asset is worthless, commit financial suicide, and the same institution that just spent 2 years building infrastructure around it, which is absolutely stupid and unlikely. And again, in terms of the media talking about Bitcoin, traditional media will always create narrative that do not support Bitcoin. On big papers, on big news, they have officially declared dead Bitcoin 467 times since the beginning, and it just continues. The first time they said that Bitcoin will be dead, it was 2010, and one Bitcoin was worth 11 cents. So yeah, this is a 60 million plus increase return since the first death certificate. Again, for Bitcoin to reach $0, you will need all of the following to happen simultaneously. All the 100,000 nodes across 100 countries and in the space and in the ocean, and as I explained, to be shut down. You will need 1 zettahash of hash power to go offline, so all the miners turning off the machines in the entire planet. You will need more than 85 billions in ETF assets liquidated, so sold by institution, to go to zero. You will need more than 100 million holders, so investors like you, like me, to sell everything at the same time. You will need, as I said, every miner on earth to stop mining, every exchange in the world to delist Bitcoin. You will need every country to ban Bitcoin and enforce the banning at the same time, and 17 years of network history to erase. So the probability of all of this happening at once is effectively 0. So with that, you understand that Bitcoin is not risky. It may be the less risky investment in the world as we speak. Another question that I get often is what happens if I buy Bitcoin and then I want to sell and go back to euros, for example. So this process is called off-ramp. The on-ramp is to buy Bitcoin. The off-ramp is to go from Bitcoin to traditional currency. So what happens? It's a personalized answer that you will need, because it depends on where do you live, and it depends on if you want to follow the rules and be in a legal environment. So if you are in Europe, most likely you will need to declare to your government that you have purchased Bitcoin, sold, that you have made, for example, a gain. So if you have made a gain, in most countries, you will need to pay capital gain on that. So it's around 20-30% in Europe in most countries. If you're in Switzerland, this is 0%. If you are in Germany and you have your Bitcoin for more than a year at the time of the sale, you have 0% as well. But in most likely, you will need at least to declare that you have. So that's the only thing that happens basically. So you can do it. Now the question might be how to do it as well. So an off-ramp, you will need to use, for example, an exchange or a broker. So if you want to use a broker, there is a Montpellier in Switzerland that works pretty well. And otherwise you will need to use an exchange like Coinbase, Binance, Kraken, Bitvavo, and you will need to send your Bitcoin back to the exchange. If you had it on a hardware wallet, you will need to send it to your account on an exchange, and on the exchange click on sell, and you will have in US dollar or euros, send that back to your bank account. So that's a proper off-ramp. Can I buy a car with Bitcoin? Yes, so you can buy anything you want with Bitcoin. Bitcoin is money, even though a lot of companies, or the majority of companies, don't accept Bitcoin yet. You have Bitcoiners companies or crypto companies that are doing the exchange of currency for you. So basically, with using those companies, you can live 100% of your life in Bitcoin on a Bitcoin standard. So if you want to buy a car, you use that platforms and you pay like you have a normal credit card, normal bank account, and you pay. And what the company will do on the background is that they will sell you Bitcoin for euros, send the euros from that to the car owner, and so you will be able to pay directly. In terms of financial education, it makes sense to have a portion of your wealth in traditional currency. Especially in wealth management, we like to say that you need to have 3 to 6 months of expenses, a saving account. So something that you can take very easily in your bank account. And then everything that you don't need above 6 to 9 months should be invested. It should be money that works for you. And that's where Bitcoin is interesting, because if you have some money that you don't need for 1, 2, 3 years or more, this money is better in Bitcoin than in traditional currencies because, again, of inflation. How does Bitcoin work? So Bitcoin works on a decentralized network of computers all around the world called nodes and miners, because even miners are doing what a node is doing. So every miners is at the same time an entire Bitcoin node. So miners are not only mining new Bitcoins, they are also securing the blockchain with running the Bitcoin blockchain. All transactions are recorded on a public ledger called the blockchain. Miners are securing this blockchain with proof of work, meaning that they are mining Bitcoin with using electricity and hardware machines. So there is a real life expenditure of energy. Then cryptography is the technology that is used to protect every transaction. So when you do Bitcoin payment, you are using cryptography to certify that you are the owner and nobody have the power to go into your process of payment. So you're protected by that, and there is no central authority that is controlling the system. So a central authority would be a government, an agency, a company, a CEO, whatever. There is no authority with the Bitcoin blockchain. You have your fraction of Bitcoin, you send it to someone. This is peer-to-peer, from me to you, no one, no institution, no company in between. So that's how Bitcoin works. I received this question. It's a really rational one. She said to me, Abel, give me 7 reasons why someone should invest in Bitcoin. So first, Bitcoin has a fixed supply. This is limited in quantity. If you like, for example, to buy a new clothes, you want to be the only one to wear that new clothes, right? That's why luxury brands exist, is because you want something that nobody has or very few people have. Scarcity has always been a driver for value. It's not always the case, but it's pretty linked. So Bitcoin is limited, so that's why you want it. Then Bitcoin is protecting you against inflation. So the money that you have in your bank account right now, as we speak, is losing value because governments and central banks are printing your money, printing more and more and more money, so you can buy less things every year with the same salary. Bitcoin is protecting you against that and making you richer at the same time. Why do you need Bitcoin and why should you invest in it? Also because it's global and borderless. There is no border with Bitcoin, right? This is one currency that you can use anywhere in the world, a little bit like gold, but better because it's digital. Then this is the strongest and the most secure system in the world. The Bitcoin blockchain, the Bitcoin network is the most secured in the entire world, in the entire existence of human history. So it is protected by energy, as we said, the miners, but also through cryptography. So that's the technology that you will use when you have Bitcoin. And so it's way more secure than your bank account that you can be scammed or attacked by hackers. Then why do you need Bitcoin? Because there is a growing adoption by institutions first and individuals. I hope so. That's why I'm doing what I'm doing, is that for you to also benefit from Bitcoin and not just the big institutions that are starting to understand the game and are entering the ecosystem with billions of euros. So yeah, I hope you catch the wave before it costs a lot more, which it will. Then why do you need that? Because you have an ability to self-custody your investment. This is the first ever money that you can own yourself, without a bank, without a company. It's not real estate where you need to pay taxes every year just to have your real estate, because this is actually the property of the bank and then the property of the government, because if you don't pay your taxes, they take your property, so it's not yours. It's not a stock which is reliant on a CEO or a company or whatever. This is the first time that you can have money yourself without anyone in the middle. Why you need Bitcoin? Because there is historically a strong long-term performance. So if you look at Bitcoin performance, it gives you more than 70% per year since 2017. So almost 10 years of 70% on average per year, which is the best investment in the entire world. So if you're not already invested, you are losing something. So yeah, that's the 7 reasons to buy Bitcoin. So what are the risks of investing into Bitcoin? The only risks comes from you. So as I'm explaining Bitcoin to you, you will see that I'm always saying the best nice things about this new revolution. This is my honest opinion that this is the biggest revolution in human history since a long time with AI right now. The only risk that I see into this investment is you and your level of education, your level of seriousness with that. So why I'm saying that is because if you decide to go and invest, you have the risk of doing it wrong. So if you use, for example, platforms to invest, you don't own anything, you can lose it all today. That's why I'm helping people get out of exchanges. So if you use Binance, for example, or platforms like that, I help you buy your first hardware wallet and transfer your money to your platform, to your self-custodial wallet. So if you are interested in that, just click in the description. We can jump on a first free 15-minute call and I will see if I can help you or not regarding your situation. Then there is other forms of risk. If you decide to do the self-custody yourself without my help or without any help, you have the risk to lose your access to your Bitcoin. So again, it's not a Bitcoin related risk per se, but it is you who, for example, don't have backup option. So let's say you buy the key and you lose the key, you lose everything, right? So in order to not lose everything, you need education. And my education would be to have a backup option, meaning that when you have the key, you go for the recovery phrase, you write this somewhere safe, and you engrave it on a metal plate to protect yourself from fire or water. And you don't lose that backup, or you don't have that backup stolen from somewhere or someone, or seen by friends or family or whatever. So yeah, the risk is on you again. Then there is obviously the scams and the fraud. If you believe that you can be a millionaire in 6 months investing in that, you are being scammed, okay, even a year or two. So again, are you gonna choose to invest with someone who is telling you, oh, you're gonna make 20% per month if you invest with my solution? Again, education is the biggest protector in that. So don't be scary to invest in your education. At first, be willing to pay for an education program, to pay for a mentor, to give you a shortcut. Otherwise, you will lose way more money trying to do everything by yourself. Again, if you want some help, go in the description, click on the link, or follow me on social media so we can see if we can help you. And then there is also another risk that is again on you, is the emotional risk. Emotional decision making during market cycles. So people, when they are alone, especially, they are going to fall into every emotional traps that this investment is triggering into you. Like, for example, if there is a big drawdown of Bitcoin, you will put way more money that you should, because perhaps you're not prepared, or maybe you don't have the setup or the knowledge to maintain your investment on a long time horizon, and you will perhaps lose it, or you will put so much that you will not be able to continue your DCA strategy. So DCA is to invest every month the same amount. This is the best strategy also to not be emotionally triggered by the market volatility, the price changing. And also with that is, if you don't increase your level of understanding and knowledge, you will buy Bitcoin if someone tells you to buy, and you will sell Bitcoin if someone tells you to sell. This is one of the biggest risks as well, and how people have lost a huge amount of opportunities with Bitcoin. And then the other risk would be the political uncertainty in some countries, or even some countries are trying to make Bitcoin illegal. So regarding where you are in the world, there is a risk with you talking about Bitcoin or you trying to invest in it. So this is not a Bitcoin risk per se, but again, this is human being risk around this investment.